Hey everybody, welcome back to Ryan Makes Sense, where we discuss personal finance, investing, and chart analysis. Today, I want to show you how you can keep your peace of mind, how you can make a snap decision like that on whether a company is worth investing in. And hopefully, you can take this with you in your future stock screening and stock scanning endeavors and adventures. So we're looking at the Spirit Airlines today. Now, if you do know or you don't know, they did just, they're discussing their options for bankruptcy. And there may be some people who were investing in this who did not see this coming. I'm going to show you how we can see this from 10 miles away. So without further ado, let's go ahead and hit the subscribe button. And I'm just going to throw on some chapstick that I got from one of my races, not a sponsor. Uh, this chapstick is okay. It's got a weird thick texture. Okay. So what we're gonna do, typically when you go searching for stocks, you're gonna see this all good, feel good stuff like sales are great. They do 5 billion in sales, but they lose 676 million. Not terrible, right? It really just depends on a lot of things. And their quick ratio is a 0.94. That means if they close their doors tomorrow, they can almost pay back all their debts, notes, etc. A quick ratio at 1 or better is what we want. We see companies, think of like your big box retailers, their quick ratio, a lot of them are over leveraged with a quick ratio of zero point 0.3 to zero point 0.5. It is insane. So, a high level, Spirit Airlines does not look terrible, but can you see the metric that is a red flag, dead stop, move on type thing? Okay, I gave you enough time. It is not that there's a lot of people shorting. It is not that institutions are selling. That's all normal. It is not that they're not profitable. It's that their gross margins are negative. Yeah. So let me explain that to you. For every $100 Spirit Airlines uses to make money, they're actually only getting back $91.25. I'm sorry, $90.25. So they're spending money to lose money. It doesn't make sense. It's a recipe for immediate disaster. So, um, if you see negative gross margins, always look a little deeper. There is a scenario, let me show you, where we will see negative gross margins. And this was a company I just reviewed not too long ago. So we can see, I mean, they're not in a good situation. How long have they not been in a good situation? Uh, for quite some time. So we're down at the bottom of the Finviz screen. Gross margin -9, -10, -8, -10, 6% gross margins. That is disgusting. Negative, not good at all. 7%, 4%. These are all red flags. And you can also see that right here. They spent 1.4 billion to make 1.2 billion. They spent 1.3 billion to make 1.26 billion. They spent 1.439 billion to make 1.32 billion. The only place they did good was Q2 2023. Every time else. Oh, and then Q4 2022. They spent 1.2 billion to make 1.39, and then Q3 of 2022. And even then, their margins were super duper slim. Now we have another company that's I don't know if they're showing negative gross margins as of now. Gross margins 4%. That is disgusting. You want to see something, much better. This stock, I reviewed this and it's doing exactly what yep. All right. So, I mean, this is a red flag. You want to go down and take a peek because oftentimes maybe it's a one-off. Gross margin 4%, 4%, 17, 23, 28, 29, 41, 41. So Q1, I'm sorry, Q4 2023 and then Q2 2024 margins are low. This is kind of a beige flag at this moment because is that what it's going to be like going forward? We don't know. You can see they spent 2.7 billion to make 2.8 billion, and then 2.8 they spent 2.8 to make 2.9. So they were much better off before. You can see their gross profits. Now we're kind of getting into this potentially questionable situation for this company. And we can see also we had a huge this negative one-off in Q4 2023, negative 2.6 billion, drastically has a downstream effect moving forward. So Q2 2024, they're still feeling that impact. But look prior, all since 2020, they've been profitable except for the Q3. I'm sorry, the Q4 of 2023. So you've got to do a little bit of research, but I would say 7 times out of 10, this is a red flag of red flags. And the way you can do this when you're searching for stocks, if you just go to gross margin, you go to negative, we have 361 stocks that are disgusting. Let's look at, I've been wanting to get back into this one. Let's look at ALB here. Ticker symbol ALB. And I also want to just sort by market cap really quick. I want to see what the biggest company is that has negative gross margins, because that is insane. All right, we are loading. Is this loading too? There we go. Okay, let's see what we got. Gross margin negative. They are not profitable. They're in the S&P 500. That's crazy. Is this a one-off? We're going to find out. Gross margin negative, slightly positive, big negative, slightly positive, 22, 49, 30, 49. So Q3 of 2023, they have been shaky. They have been questionably shaky. Was there a one-time charge off? No. Operating income went bad, got worse, better, not good. So ALB is going to be one to watch as well. And we'll look at the assets and liabilities. Let's see what Spirit's assets and liabilities look like. When liabilities exceed assets, that's a recipe for disaster, a recipe for bankruptcy typically. So liabilities 8.7 billion, assets 9.5 billion. So Spirit, I think they're preemptively doing the bankruptcy because they want to be in a somewhat healthy state as they enter, which is good. ALB total assets 18.3 billion, total liabilities 6.9 billion. So yeah, this ALB actually does not look too horrible, but we definitely would want to probably wait this one out. Why are their margins being crushed quarter over quarter? I mean, it literally came to almost bottom of my pattern here. But these gross margins are just scary. Not profitable. Earnings per share next year, 1,000%. That's wild. I mean, this is just fantastic. Okay, so 2023, they did 9.6 billion. 2024, trailing 12 months, they're only at 7.46 billion. This company might actually be heading even lower, unfortunately. We'll probably get a test of 140 and then maybe trend back lower. I don't know. We really have to see. This is a quarter by quarter company at the moment. Let's see what institutions are doing. So institutions own 94%, I was going to say. I mean, they own 94%. I could see it going both ways. Okay, let's just do some quick. I guess we don't have to do any quick calculation. We can see there's still some 124 million shares, 107. So now institutions own over 100%. So institutions and hedge funds have been adding this one. But I mean, you gotta just pay attention to this gross margin thing right here because it could spell out disaster ahead. So, what's our biggest company that has negative? Ventas. Ooh, let's look at that. Rivian. I just added more Rivian. This is crazy. Let's see what's going on here. This is a real estate investment trust. So they offer a dividend. This could be pretty devastating. Ooh, fell out of a big channel. They're not profitable. They offer a dividend. Yep. Okay, their gross margin isn't that bad. It's negative, which is bad. I mean, 2023 they did 4.5 billion, 2024 4.7 billion. They're growing. EPS is slightly getting better. Quick ratio, that's questionable. Let's go down and take a peek. So they spent let's see, gross margins. Oh, they had a big negative here that's still impacting them. Okay. So they spent 1.8 billion to make 1.1 billion. But ever since then, it's been decent. 17%, 18%. Yeah, this company actually looks like a decent company. Assets and liabilities are gonna be really close. Nah, yeah, 24 billion assets, 14 billion liabilities. Actually, that's pretty healthy. That's $10 billion buffer. This company, I mean, I don't really see any issues with this company, mainly because it was a Q4 2023 where they had the big negative charge off here. It looks like every Q4 they have a big negative charge off. So negative 57 million here, I'm sorry, percent, negative 59%, negative 57. So it looks like a trend. And then outside of that, we're between 18, 17, 16, 17, 18, 18, 5, about 16 to 18% really. So that's pretty good. I don't really have any concerns about this. The stock looks like it's trading at all-time highs too, which no, it's not. Wow. This stock is trading at the same levels as 2014. Wow, this stock's been around since the 89. So this stock has, if you've been in this stock since, oh gosh, 2000, let's go here, 2013, you are upset because you've been flat. So again, just do your own research. If you would have got in during the COVID panic, you would have been up significantly. So that's all I got for you guys. Always watch out for those negative gross margins. That's an automatic red flag. Do your research. We looked at ALB. That seems okay. That's going to be a quarter by quarter basis. Then we looked at VTR, which shows that is a pattern for every Q4. So overall, no concerns on the ones we looked at, but always just make sure the company you're investing in, you feel comfortable with where their gross margins are at. So that's all I've got. If you made it this far, consider subscribing or hitting the like or leaving a comment. The engagement lets YouTube know that maybe my channel is worth pushing out to more than 30 to 100 people. So thank you so much. Have a great day. Adios.